because this is then price just usually starts the sideways dance daily pullback type of a setting. And this is where we arrive to really important extension level that again I didn't talk about before. Daily time frame development, daily time frame stage. And what I'm talking about is when we have 1 day close opening on the next day, expecting a particular direction to take place, naturally on the lower time frames, expecting for a classic buy day to happen. Let's say if we are talking about bullish conditions, if next day we are opening up expecting for a buy day to take place, this is obviously then on the lower time frames having the daily direction on 1 hour 15-minute on execution time frames. They're expecting for our classic power of 3 London kill zone low of the day and near kill zone continuation to take place, giving us one healthy bullish candle. But for all that to happen, obviously we need to understand what is taking place on the daily time frame, because daily time frame level, speedy raise, direction, whole momentum, pressure, and everything else is really important. This is what usually determines whether you're going to blow against the wind with your trades or if you are going to ride that higher time frame momentum. This is usually when those trades play out relatively quickly compared to all the ones when we are trading against the daily time frame momentum. So now in this one, we are particularly going to talk about the daily time frame and taking this whole development from this area right here all the way up to this area right here. What we have here is one neat expansion type of a range. We can see that price on down dollar being going to the upside for 158 days right here. Now this is one of those very simple and understandable, very readable type of formations when price is very nicely just trending to the upside. There are really not many secrets about these type of formations. We focus on ranges, we focus on discount, pairing it with bullish beta raise, expecting for this to form a low and keep on going higher, seeking for buy side liquidity. Then same exact thing again, when price starts pulling back, we are focusing on the discount, looking for price to start pushing to the upside. This is when we focus on daily stage days, looking for classic buy days on the lower time frames, and same thing again. But now another important factor and something that I haven't talked about much is where exactly do we expect for price to stop pushing into that one direction when we can start moving onto the sidelines without crossing out all of those profits that we made in that clear one-sided environment. So focusing from this point right here, this low, what we had here was a simple push to the upside, bear trap type of a formation, price running buy side, sell side, and continuing to the upside from all the price action that took place inside of this area. We don't know whether we have bullish stage or not. To when price formed this candle right here and started pushing to the downside, this is obviously if we are expecting from weekly and monthly time frame, and let's say it's already rejecting a bullish PDA right here. If we are sensing that shift in delivery is about to happen, let's take this first range right here and focus on the discount side. Now from the previous video, I think you guys remember regarding the order blocks, in this type of situation you could go to 2-day time frame or stuff like that, or you can simply take the bulk of all of these candles right here, these 3 consecutive downside candles, which is just a one nice and clean bullish order block right here. So notice how price reached into the discount area. We pair it with the bullish beat array, which is this bullish order block right here, and price gives this bullish close to the upside. So from this point, what we now are expecting to see is for price to see buy side liquidity. So meaning that after this daily close right here, what we expect all the way at least to this buy side liquidity right here, what we are expecting to see are bullish days. And in other words, we are expecting for price to keep on rushing to the upside every single day opening after the near midnight open. Our main focus goes to the upside delivery. But now the question is, after price takes out this buy side liquidity, how do we know how far price is going to keep on pushing higher? Then should we start moving onto the sidelines, not expecting for buy days to take place? And this is where we arrive to really important extension level that again I didn't talk about before. One thing that's important to mention, whenever price after a significant run to the upside, when it runs let's say a liquidity pool, whether it's consolidation or just simple height, when it runs that after already a very one-sided type of expansion, very often that's the case when we start seeing price reacting. It doesn't mean that it's about to give a proper shift to the downside and just keep on dropping from there. But very often again, at least what we see after clear liquidity runs, after seeing one-sided expansion, what we often see is price at least reacting and giving a pullback before it continues to the buy side again. This type of developments especially are important when above or near that liquidity pool we have bearish PD race. So when price runs into it as we have bullish order flow present, which is when price is breaking through bearish PD race and respecting the bullish PD race. This is when pairing buy side liquidity with bearish PD race, we are not expecting for price to give a complete shift in delivery. This is when we are expecting for price to give a reaction. And when we have that, this is then from bullish daily stage, we shift into the daily pullback type of a situation, daily pullback type of a setting. So this is where very often most of the losses happen for traders because some of them are still trying to push to the upside. Some of them are trying to catch every single short inside of this daily pullback setting. But again, this is a way more difficult area to trade in. Most of the wins happen inside of these type of situations when price bottoms out and we see price start pushing higher again as having a clear daily stage to the upside, aiming for a bigger buy side liquidity pool. So now one thing again that I want to talk about, focusing on this area right here, we can already see that price ran into the discount, so we don't need that. So now that one extension level that I wanted to talk about regarding all the liquidity pools and everything else, what I personally use. Seeing this first expansion that breaks out and gives a pullback from the low to the high, drawing extension, the zone that I really pay attention to because it aligns almost every time is this zone right here from 0.25 to 0.5. This is the range that beforehand when price even breaks out above this buy side liquidity, this is when I know this high is confirmed, that this low is confirmed, meaning that this expansion is also confirmed. So from that point, what I do using extensions from low to the high, I draw the Fibonacci extensions, mark the zone for myself, look left to see if I had any buy side liquidity or opposing PD race in that area as well. And this is usually where price starts consolidating and giving that pullback. So obviously when price reaches into it, this is when in most cases I start moving onto the sidelines, not having daily bullish stage from that point and just simply being a lot more picky, a lot more patient with my trades. So again, having this zone right here, what we would focus on the left side is obviously all of these buy side liquidity pools above this first height. So we have this buy side right here, we have buy side liquidity right here, and this one is already far above our zone. So then we look to the left again. What we have is this old imbalance right here, and we have this bullish imbalance right here, which again, as you guys know, for quite some time stays as a sensitive area. So in this case, notice how price right after reaching into this extension zone right here, tapping into these old fair value gaps, it reacted lower, and after that it just literally started consolidating. So this is where a lot of traders catch a lot of traps because this is then price just usually starts the sideways dance, and this is where daily time frame and daily direction is very hard to predict, meaning that they move into a higher risk scalping environment. This is where we want to be a lot more careful with our positions and just simply not rush into average setups. Main focus goes to the lower timeframes, execution timeframes, trading from liquidity pool to liquidity pool. Again, what comes to the lower timeframes like 1 hour, 15-minute execution timeframes and so on, not focusing that much on the daily formation because then we are in this type of area, we simply don't have a clear stage. Prices hit this extension zone, price hit some opposing PD race, price ran buy side liquidity, and this is where we want to be a lot more careful. So now deleting all of this right here, what we have from this point after having this one-sided clear bullish daily stage, here focusing only on long positions. Once price entered our extension zone, this is then obviously we move to the silence and then we start seeing price retrace lower. So in this case, what we would do, obviously taking this low now and this high right here, we would find the discount area. So now we have the discount area right here, and what we want to do is pair it with a bullish PD race. The first thing that we can see is this imbalance. So let's not go to the higher time frames to make this as one bullish candle. It's pretty clear here as well. So what you can do just from this daily time frame is simply mark this first bullish fair value gap. Notice how price starts consolidating. Then we get this first bullish expansion, very similar to what we saw right here. And after that, we enter another bullish daily stage type of a situation. Another situation then price to at least this high is going to give us bullish days where we open after the near connect, open every single day expecting for bullish days to take place. Then again, once price takes out this high right here, this is when we want to already be ready with our extensions. Now from this low right here to this high, because this was our initial expansion, this is when we want to get our extensions and see if their price is about to retrace and stop pushing to the upside. So now notice what happens. Again, after taking out this buy side liquidity, price keeps on pushing higher, and as soon as it enters our extension range of minus 0.25 to minus 0.5, this is when price starts stopping out and starts retracing again. So this is again the area there we have clear buy days right here, focusing on buy side delivery. Price stops out and shifts into the bearish daily pullback type of a setting, which is again a lot harder to trade compared to this one because there's usually a lot more mess and we don't know how far price is going to pull back before it shoots to the upside. So all of those short positions usually are very short-lived, as the whole momentum, the whole pressure from this structure-wise is still very much to the upside right here. Counter thing that I already mentioned, inside of the zone, you want to look if we had any buy-side liquidity pools and liquidity raised. So in this case, not much that's going on right here. The only level that we have is this buy-side liquidity right here, and we can pair it with all of this imbalance. That's lining up with this area, so I would go for this BPR, buy-side imbalance filled with bearish imbalance, and notice how nice the price ended up rejecting this exact area before retracing. So again, it usually lines up like that. Price runs buy-side liquidity, around we have some bearish Peter rates, but the main key area and that I noticed that most of the time price will start retracing from is this zone right here, which is the extension identifying the prior dealing range. And this is the prior dealing range that you are focusing on. Once price breaks out above the dealing range is high, this is when we can identify this extension area, stack it with other confluence factors, run it up, expecting for bullish daily stages to take place, and move into the sidelines once price hits this area right here. All right, so what we would do now from this point, once price starts pulling back, again, we repeat the same exact action. What we have here is another dealing range. So we focus from the very low to the top, identify the discount side, then look to pair it with bullish P raise. So what we have here is this bullish fair value gap that wasn't filled. We don't want to really count this one, as you can see price already rejected it. So we focus on this clean bullish fair value gap. We'll look left. What we have here is bullish order block as well. We mark that. And after that, notice that price eventually bottoms out. Give this sharp bullish candle, which is another very similar thing to what we saw prior to that, which is right here, right here. So notice that after this candle, what we enter again is bullish daily stage. So from that point, obviously, what we focus on again is this buy side liquidity right here. And once price takes out this buy side liquidity, us focusing again after this candle formed, focusing on buy side delivery on bullish daily candles. Once price takes out this buy side liquidity, what we have is a clean prior confirmed range right here. So again, what we do is focus on the extension zone. So taking it from the low to the high, notice where price runs into before pulling back again, and the high and bulk of the volume, the bodies of candles closed very nicely right on the minus 0.5, but overall price stayed inside of this range. So again, once price reaches into it, I personally out. I'm looking for a pullback to take place. I'm not looking for buy days anymore from that point. Also, as always, as mentioned before, we want to pair it with other factors. So around that area, we had this massive buy side liquidity pool right here. Notice that price ran this high. Looking even left, we had a lot of chop, so I wouldn't focus on that. This would be totally enough. Price running clear buy side liquidity pool into this extension zone and then starts pulling back. So now, once again, what we focus on is another dealing range. In this case, we can see that price didn't retrace into the discount side. So obviously for us, the buy side type of delivery would be a little bit unclear because we don't have very neat and clear bullish P rays, just quite a few bullish expansion candles. So of course, we could go higher to see what we have on weekly or 2-day time frame or 3-day time frame to see if we have just one bullish candle. But overall, this type of bullish delivery would be a little bit more unclear. But let's say after this bullish expansion, if you start focusing on the buy side delivery, again, it's not even near as clean compared to all of these right here. What's running into the discount, we pair it with bullish P rate. It gives a clear bullish expansion candle from that area. And obviously they start riding the bullish momentum. In this case, it's not as clean. We don't have as much confluence, but just for example purposes, focusing on the range that we talked about. Once price takes out this high right here, and we know that we had a dealing range right here confirmed. This is again when we take this low, draw it to the very high, and notice what price reaches into before giving this pullback. And in this case, it wasn't a pullback, it was a full-on reversal. Price fully reversed from this area, and even it not tagging the discount side, it still ran right into this area. And as mentioned before, as soon as price touches the low of it, I'm fully out and not looking for any buy days anymore. So I hope you will find this useful. I hope you will use it in your trading and find a way to fit it in your trading plan if you trade similar like me. I really covered everything that I had in mind for today's video, and we will talk very soon. Take care, guys.